Very good evening and welcome to CNBC TV 18 special coverage of the India Economic Summit 2017. A summit that features the biggest voices from the government, the biggest policymakers on one hand and corporate titans and members of India Inc. on the other. Now importantly, they meet at a time when a number of issues are beginning to rise. Issues with respect to the state of the Indian economy, the state of the growth story that we have seen. Are there cracks emerging? There are also issues being raised about the GST itself. Is it too complicated? Is it too complex? Is the network prepared? Questions being raised. Also issues such as job creation and innovation top on the agenda. Now we raised this whole battery of issues with a number of persons from both India Inc. as well as policy makers. The first issue, of course, that we raised was whether or not the India growth story is sound. Now, there are different narratives being spun around various data points, but the key concern essentially here is that the slowdown that we have seen very recently in the recent quarters, is that just a minor road bump? Or are there bigger, more structural issues at hand that need to be confronted? Now, we posed this question to a whole battery of members of India Inc. We spoke to the likes of Sunil Bharti Mittal, Adi Godrej, Ajit Gulabchand. Let's in fact listen in to what they had to say.
Well, I always say 6 to 7% growth in any place in the world would be a cause for a great deal of jealousy. And I think India should be happy. So I think we are very fortunate as a nation that is still growing at a good momentum. Yes, we would like to be at 8, 9%. But let's not lose hope just because we have had a bit of a dip.
So speaking of impetus to growth, the RBI is maintaining a status quo position. The commentary is that even for the coming quarters, that's the position they'll maintain. Just your sense, sir.
Well, I think it was expected that the rates are not going to go down in a hurry. And everybody will push RBI, and eventually they'll have to balance out inflation, economic growth, and the needs of the industry. So I'm hopeful.
At the IMC, you mentioned that the industry is undertaking a massive investment. 50,000-60,000 crores is the figure you cited. Yeah. Will that be enough, sir, for meeting the 2020 target for 5G?
2020, 5G is just a new technological box which has to go. So that's not the...
But TARS, fiber, will that be enough?
Yeah, a lot of work is going on.
Well, you see, I can only tell you that India is going through a golden period, but it has a long way to go. And I will suggest there are a lot of foreign investments are planning for India in a big way. But the only way is that foreign investments, they come in India in a big way, is that they should be given a proper red carpet with removing all the obstacles as they did in the country like China. China's success was because they had a free hand and the investment happened in a big way. So we have to have India to clear all the problems, and the foreign investment should come in a big way in India. And this is the plan for the future. I see very bright for India.
So particularly you would be very happy, sir, because I mean, you're one of your companies, Ashok Leyland, one of the flagship companies. Commercial vehicle sector is doing well. What is your India sort of team telling you about the latent sort of demand in the Indian economy?
Well, you can see the figures. You can see the stock market. You can see the total markets, new changes which are taking place. So our professionals are positive on India's economy.
The problem was that the GDP growth rate was a low 5.7% in the April-June quarter. In my view, most of it was due to low GDP growth in the month of June. June was the month before the introduction of the GST on the 1st of July. And because many of the GST rates on manufactured products were lower than the earlier cumulative tax rates, there was destocking. So most of the clearance took place after July 1st. Okay. I expect the GDP growth rate will catch up in the July-September quarter, and it will be very good in the second half of the year.
I think you have to take this debate beyond a quarter here or there, and you've got to look at where India has come from. In the last decade and two, India's GDP has multiplied 10 times. Its foreign exchange reserves have multiplied 50 times. And FDI is at the highest for any country in the world. I think that's getting lost in a quarter here or a quarter there. And I would not allow that to be the end result of all that's going on.
So half glass full.
Yeah, in fact, that's my point, that I would be optimistic about where the Indian economy is going. The Indian economy has so many factors working for it. Yes, there are structural things that need to change. Those are the kind of things that the Prime Minister was talking about. The kind of reforms he's pushed through in 3 years are more than happened in the prior some years. Now, to be clear, reform started with the prior government. This is not a political situation. I think India and its citizenry and its polity is ready for reform and is pushing reform and is actually picking up the pace of reform over the last few years. Reform, by the nature of the word, will be disruptive. It will be challenging. Having the patience and the perseverance to pursue reform for the right reasons is what I think the Prime Minister is trying to push for.
I'm greatly heartened by the recent announcement that the Prime Minister has made, which is he is aware of the economic situation and he is going to do something on growth over there. And that is something that companies like ours depend on hugely, is to see whether government spending can increase, what is it that can be done to bring back demand into the system. Having said that, it need not only be CapEx. There could be a lot of OpEx. And with our digital offerings, we are now trying to bring solutions to our customers which will help make them much more competitive, even in an environment which is difficult at the moment.
So I think the slowdown is for real. But having said that, I think we need to separate out the sources of the slowdown, which if you look at demonetization, it's more of a liquidity shock. And you look at GST, a pretty significant supply shock, given the unpreparedness of, if you think about the channel, the wholesale channel, if you think about SMEs to deal with it. So clearly growth has come back. And we knew with GST coming in, there would be a period of adjustment before we would see the benefits of what people have talked about, the 1 to 2 points increase in GDP. So I think there is work to be done to address some of the implementation issues. I think the bigger point to make is, as we think about growth from a 3 to 5 year perspective, I think jobs, private investment, kickstarting the private investment has to be a critical priority.
I'm saying that it should be down to about 7% to 8% should be the interest rate at which loans are available to people, to corporations. The reason I've maintained that, despite whatever it has been, it used to be at 13%. It's come down very marginally to about 12, 11. But the reason I say that is when you have that high rate of interest, the IRRs required in a business to be successful are about 20%. Now that is a very high risk IRR, and therefore less investment will flow in. So if you want a big body of investment to come in, that will come in only when the IRRs drop to about 12, which can only happen if your interest rates are 7 and 7%. So that is why you must bring it down quickly. America, England at various times have brought down. We looked at 0.25%, 0.25%. No. When you look at it, you've got to look at it, if it is 12 today, 25% of 12 is 3% less. If you go in that kind of blocks, it will have an impact.
I think, there are a lot of programs which have either been got to almost 90-95% stage of completion in terms of process. You need to give out 20, 30, 40 major contracts out to the industry, to the private sector. And this is what will build up a huge momentum in investments, manufacturing, and job creation in the system, because it will create a lot of ancillary jobs.
On that note, let's slip into a very short break. But another contentious issue has been the teething worries with respect to GST. Are these worries here to stay? Is there urgent tweaking required? We find out the answers to those questions on the other side. Keep watching.